Everyone, Joe Bladdock here. Today, talking about one of the topics that I get a lot of questions about, actually, and that's uh, how to get the best mortgage rate in Canada. And I'll be covering this with you today because it's really important. And specifically, it's really important because rates are absolutely outrageous right now in Canada. Looking at rates right now in Canada, it's completely, I can't even believe how high rates have gone in Canada for mortgages. I mean, compared to renters, um, their rents in Canada are capped to be increased by 2.5% in Ontario. Mortgage rates have gone up 300% in Ontario. So, is that even fair? What's going to happen to these folks owning homes? It's going to be an interesting dynamic. So, with rates having gone up now 300% versus rents only allowed to go up 2.5% a year in Ontario, it's really important as a homeowner to do what you can to get the absolute best interest rate in Canada. So, as I get into this, if you have any questions, put them in the chat. I'm watching the chat here today. I'll make sure that I try to address any questions. Please try to keep the profanity to a minimum. We saw some profanity last week here on Canadian Mortgage Weekly, but with rates having gone up now just about 300% since the low point, it's really important to be able to get this out today. So, what do you guys think? What's one of the ways that you guys think you can get the best rate in Canada on your mortgage, whether or not you're applying for buying a home or renewing a home or even refinancing your home? These tips will cover all of that so you can get the best rate. All right. Well, a lot of the times when you apply for a mortgage, you have your credit score, right? So you're going to want to optimize your credit score so it's the highest credit score possible. So, obviously, how do you get the highest credit score possible? Make sure that you're paying your accounts on time. And that means before the due date, of course. And that means at least paying that minimum payment on your credit card to ensure that you have paid that minimum payment. And it's better to pay that minimum payment than it is to essentially skip that and wait until you can pay off the whole balance. I know that a lot of people think, oh, wait, I don't want to pay this month. I'll pay next month and I'll have the whole balance at that point. Well, that's not how it works. You got to keep paying at least the minimum payment in Canada to get that credit score up. So, one thing you can do is get that credit score up before you apply for that mortgage and pay down those debts on time and pay as many as you can down as well. The bank is less concerned about you having an emergency fund right now to buy a home versus having low debts. I know it probably seems backwards in a lot of different ways, but if you have $10,000 extra in your TFSA account and you have a $10,000 balance remaining on your car loan, it's way better on your mortgage application to actually use that $10,000 and pay off your car loan instead of having that in your account as an emergency fund. And a lot of people will disagree with me. And in a lot of ways, I disagree with that as well because an emergency fund is key. It helps you not go into debt. It helps you be able to uh, fund any unexpected emergencies. And you know what? 20% down payment actually doesn't get you the best rate. You get a better rate if you put down less than 20% down. And it's weird. A lot of clients don't even understand how that works, but less than 20% down gets you a mortgage with CMHC insurance. And the banks actually take on less risk when you have a mortgage with CMHC insurance. And because of that, less risk, they actually pass along those savings to the client. Right now, mortgage rates are about 0.5% to 0.75% lower if you put less than 20% down. Mind boggling, right? Absolutely mind boggling. And, saving 20% down does save you that cost of the mortgage insurance. Obviously, that's a hard cost for sure, and that's added to your mortgage balance. But the bank really prefers that you take on mortgage insurance with CMHC, and they give you a better rate because of that. Funny enough. So, a lot of the times when you are looking at these rate sites for mortgage rates, you'll see our best rate. And a lot of the times, these best rates that are advertised on these rate sites are insured rates or insurable rates. And insured rates or insurable rates are interest rates that are insured through CMHC, where the client's actually adding the cost for CMHC onto their mortgage, or they're insured on the back end through the lender, and the lender pays for the insurance, and then you also get that little bit of a rate discount. So thank you very much. Who was it that said that here? Dave Hellam. So thank you very much for that comment there. And the comment was putting 20% down and saving up will give you the best rate. And I was just debunking that myth, because putting 20% down actually gets you a higher rate than if you were to put less than 20% down. Anywhere between 5 and 19% down will get you a better rate than 20% or more. And I was just chatting about how the reason that is because the bank takes on less risk when you put down less than 20% down through that insured mortgage. All right, so pay down as much debt as possible before you apply for that mortgage. So when you're applying for that mortgage, you have as little to no credit card debt, as little to no line of credit debt, and if you can, pay off that car loan. Or if you are looking at buying a new vehicle, I strongly recommend that the new vehicle is purchased after the mortgage is closed, because the new vehicle payment is taken into account on your mortgage application, and quite often it can actually either decrease the amount that they approve on your mortgage, or if you still need that amount, actually increases the interest rate on that mortgage that you're getting, because there's that car payment. And having a car loan is not necessarily a bad thing, because we need vehicles to get to and from work, and take our kids to soccer practice, and go get groceries and all that fun stuff. Go for a nice Saturday afternoon drive, whatever it may be. But make sure that you pay down as much debt as possible, and paid off your car loan if possible, or wait until the mortgage is funded and closed so you can actually get that car after the mortgage is funded. That's really going to give you the best situation when you're applying for that mortgage with the lender, and get the best rate on that side of things. Number two, another way you can get the best rate in this rising rate environment is to shop around. And there's two different ways that you can shop around for a mortgage in Canada. One way, and I strongly recommend this if you have the time, and that is actually to make an appointment with every lender out there and sit down with every lender and take the time to go through each one of their pre-approvals. So, sit down with Royal Bank, sit down with TD Bank, sit down with National Bank, sit down with CIBC, sit down with what's the other one? Scotiabank, sit down with Meridian Credit Union, sit down with Duca Credit Union, sit down with First Ontario Credit Union. Hey, I'm doing pretty good. Thanks very much for the question. That was, how do I say that? Afridi. Thanks for the question there. So just sit down with every lender as you're applying for that mortgage. It's going to be really key to be able to get an offer and a pre-approval from every lender out there. Now, that might take you quite a bit of time to do because sitting down with every lender, that's about an hour with each lender. And with the amount of lenders in Ontario, it might take you 10 to 20 hours of sitting down plus drive time, or meeting with them over the Zoom call, whatever you need to do to be able to do that. And then once you get the best rate, then you start negotiating with all the lenders you've been seeing, contacting them, and just negotiating with them products, features to try to get a better deal. And it's funny because I was offered a job with a few of the big lending institutions in Canada, and they actually paid their mortgage specialists that work directly for the bank a higher commission if they sell you a mortgage with less features, less benefits, and a higher interest rate. So much so that if you don't negotiate with them, they will actually sell you a higher interest rate and be able to go on that trip to Bermuda or whatever it is that the bank is advertising. Yes, your one question. So I have here a question. My rate is 2.09%. We have no car payments. All our cards are clear, and we have money in our TFSAs. That's a really good situation to be in. Fantastic. So you're already taking care of number one. No problem. The key thing is that when your renewal comes up, 2.09% will not be available. And to make sure that you get the best rate, you're doing the right thing, shopping around is going to be the next thing. If you don't want to shop around yourself, then you can engage a mortgage broker like myself in shopping around for you. I get paid by the lender that you choose to do business with. So there is actually no fee to the client for me doing that for you. However, you save the time, and I'm able to help you as a client to shop around and negotiate on your behalf to get all those offers in for you that way. There's going to be a third thing I'm going to cover in just a minute here. I'm just looking here. Brother, I am a car painter master. I'm going to Canada. Awesome. I would love to connect with you to get your services at some point. You never know what client I have that has that classic car that needs a repaint, and great job that you have there. Very, very in demand. I know a few people in Ontario that are in that industry and they love it. So we'd love to see you in Canada. Make sure that you connect with me when you get here. There's some new to Canada programs I can help you with to get a mortgage in Canada when you're ready to do that. So, one, pay down debts as much as possible. And when I say pay down debts, when the bank actually checks your credit, there's a specific way the credit bureaus actually look at your credit card debt. And a lot of people don't know this. This is a free tip today. When you pay off your 100% credit card balance by the due date, then what's reported to Equifax and TransUnion is actually the uh, balance that you had paid off on your credit bureau. So when you apply for that mortgage, you're actually showing the bank that you have, like, say, for example, if you had a $3,000 credit card balance, but you paid that off by the due date. What makes me happy? Music makes me happy. I'm in an 80s rock cover band. We just played Kempenfest in Barrie, Ontario. We just played the Alliston Potato Festival in Alliston. It's pretty awesome. So thanks for asking what makes me happy. Music makes me really happy. Love playing music. Also play at my church on Sundays. I'm playing this Sunday. And all right, yeah. Shoot your questions about mortgages while I just finish this tip here. So we have paying off your balance by the due date. And when you pay off your balance by the due date, it still shows the balance on your credit bureau. What you need to do is to pay off the credit card balance before the statement date. And that way, the statement is issued showing a zero balance, and that is sent off to the credit bureaus. You don't think it's ethical to sell mortgages? Okay, I would like to hear more about why that's the thing. Should mortgages not even be available then? Uh, the reason why I'm selling mortgages is because as a broker, I'm able to offer more options than just one lender. And when I bought my first home, how do I say your name? Ile Philosophy. When I bought my first home, I went to my bank and they actually put me in a product that cost me over $10,000 more than what I could have got with a mortgage broker. So when I saw that, after going to business school in Ontario, I decided to get my mortgage broker's license because I really wanted to help other homeowners save that money too. So in that regard, ELA philosophy, I think it is more ethical to sell mortgages as a broker versus than in a bank. I had mentioned earlier on in this show that I was offered a job by one of the big financial institutions to sell mortgages for that specific lender and only that specific lender. And they told me that the higher rate I'm able to get the client and the less features I'm able to offer the client, then the more commission I make. And then I'm also eligible for trips and frills as an employee. That was unethical to me, hands down. I couldn't even believe that they pay their mortgage specialists more money for their clients having less features on their mortgage. Whereas as a mortgage broker, I typically get paid more by the lenders when I save the client's money. So it's a complete 360 or 180, whatever you want to say, versus working for a lender directly. But great question. Do I think it's ethical to sell mortgages? I think it's very ethical, and um, it's a needed service, especially for those folks that are losing their homes and their banks won't approve them. I'd rather see a person get a mortgage that can help save their home versus that person losing their home to the bank. So, getting back to my tip, make sure you pay down your credit card balance before the statement date. And the statement date is the day your statement is issued. That is typically 5 to 7 days before your due date, can be sometimes 10 days before your due date. And that will actually report a zero balance to your credit bureau for your credit card. So when you're applying for that mortgage, you're not showing the bank that you pay off a balance every month by the due date, because that's going to show about the balance you've paid off on your credit bureau as still owing, but you're paying off the balance before the statement date, which actually makes it so the balance doesn't show to the lender that you're applying to. All right, so tip number one, pay down as many debts as possible before your application. Number two, reach out to all the lenders and make appointments with all of them and get pre-approvals from every single lender. And then once you get that, compare them, negotiate across. That can take you 10 to 20 hours. But if you don't have that time, engage a mortgage broker. They will do that for you. I have been a broker now. This is my 13th year in the industry. So I've seen a lot. I've been in the industry since hey, Peter, I've been in the industry since 2010. So I've seen quite a bit. I got in the industry just after the financial crisis there. And I got introduced into the industry by a friend who's a mortgage broker that helped me understand how the business worked and why he became a mortgage broker to help clients actually get into the industry. So, number three, third thing you can do to get the best mortgage rate, and this is quite key actually, because not having this, hey, good morning, Saskatchewan, awesome to see you here. You know, all Canadians are welcome on this channel, of course, and this all applies to all Canadians. Number three would be, so we got Raquel Lynn joining from Saskatchewan. So we have having make sure you follow my channel for updates. I release a new video every day. We strongly encourage that you have your documents ready when looking for a mortgage because rates are going up so quickly right now in Canada. So quickly. Every day it seems like I'm getting a rate increase announcement from another lender in my inbox. And because of that, it's really important to have your documents ready and ready to be sent and that they're current. And that is a big deal because when I get an offer from a lender, they only give me so much time to submit those documents. So if you're seeking a mortgage renewal or applying for a pre-approval and the rate is say 5.49 and you want to lock in that rate on your pre-approval, well, if you take 2 weeks to put together all the documents, maybe 3 weeks, then by the time I get those documents, that rate could have gone to 5.59, 5.69, 5.89, and then you've lost that opportunity to get the lowest rate possible. And that's quite unfortunate because having those documents ready would have made all the difference. I keep all my documents right now in folders. And here's typically what someone would need if they're purchasing a home. And I'll also cover what you would need if you're renewing a home. So if you're purchasing a home, typical documents you need if you're an employee that's full-time, 2 recent pay stubs from within the last 45 days, T4 slips from the last 2 years, a letter of employment that is from your employer dated within the last 45 days. You'll need also your tax return, notice of assessments ready to go to show the lender that you've filed your taxes and you're up to date on that. You'll need to make sure that you have an unexpired identification document. That is really key. You don't want to show up with an expired driver's license. So those are some of the main documents you'll need when you're purchasing a home. When you're renewing a mortgage, in addition to those documents, they will ask for a copy of your property tax bill, copy of your mortgage statement, whether it's the annual statement or the online screen print, and they will also ask for confirmation of your home insurance. And then that way, when you're renewing your mortgage and I'm able to present an offer that you like and want to go ahead with, we can lock it in pretty much right away. So you don't have that situation where we talk about mortgage rates and then all of a sudden, that rate's not available because those documents weren't available for 2 to 3 weeks while you gathered your pay stubs, filed your taxes, asked the employer for that letter, found your T4 slips, renewed your identification so it's not expired, and asked the city for a copy of your property tax bill, and have your lender email you a copy of your mortgage statement, because that can all take time. And typically, what I see is folks that are not prepared, they reach out, they don't have their documents, and then 3 weeks later, they're disappointed when the rate is higher than what we chatted about. And that's because the documents weren't ready and they weren't able to lock that rate in as a result. So, big deal. I strongly suggest that you have those ready. So, number one, pay down as many debts as possible. It's a big deal. And with that, bring down your credit card debt, line of credit debt as much as possible, and hold off on buying that new vehicle until your mortgage is closed. Number two, make sure you shop around and make appointments with all the major lenders and credit unions, and get offers from them in writing, and shop around with those offers and negotiate with your contacts across different lenders. If you don't want to do that, you can always engage a broker like myself. I've been in the industry for 13 years. We do that fairly quickly and can do that within a few hours and get some offers on the table that can really show you what you should be expecting. And number three is to have those documents ready for that pre-approval or mortgage renewal, because you don't want to miss out on a good interest rate simply by having to scurry around and find those documents, because that can sometimes delay things to the point where you're getting a disappointing interest rate at the end of the day. And banks actually count on you not being prepared, so that they are able to offer you the higher interest rate, and that's unfortunate. So what's happening in the mortgage market outside of these? Hey, Faster. What's happening in the mortgage market right now outside of these three tips that we have available for being able to get the best mortgage rate? Well, fixed rates have continued to go up in Canada, quite a significant amount. Right now, I've seen the bond yield head up all week this week. Right now, see where it's sitting at 4.08%. And the 5-year fixed rate's based off the bond yield. The bond yield is what investors are predicting variable rates will be. And looks like the bond market is predicting that rates will go up on September the 6th, 2023. And that's a lot to do with higher inflation in Canada. We did see inflation go up in Canada last month from 2.8%, which was very close to that target 2% rate, to 3.3%. Big deal, because 3.3% is a lot higher than the range that the government wants to keep inflation at in Canada. Now, mind you, and it's pretty funny, a lot of this increase of inflation is happening because of higher interest rates. So by raising the rates on September the 6th, we will be contributing to the higher inflation in order to combat inflation. I know it's kind of funny, but it's not funny at the same time. Also, rates went up in the States last month on July 26th. And the reason they went up last month for July 26th was because that inflation rate is still not at 2% in the United States. As a matter of fact, it went from 3% to 3.2% last month. So an increase in inflation in the United States as well. We are also seeing an increase of the national average house price in Canada. Right now, the national average house price in Canada, let's see here, showing a 6% change, currently sitting at $668,754. To purchase an average home in Canada, the average family income needs to be about $140,000 to $150,000, which is quite significant. A lot of these families that I'm seeing purchase homes right now are buying them with co-signers, mom, dad, uncle, aunt, friend, coworker, grandma, grandpa. They're going on the mortgage with the kids to make sure that they can buy something because they don't have enough income as first-time home buyers. Even GTA, yes, 940,000. Thank you very much. GTA average house price in GTA 940,000. So that's quite the increase from just a few years ago. All right, what else are we seeing here? I'm seeing that unemployment. Unemployment is one of those things that I was hoping that if it did go down. Oh, thanks, Kyle. So that's actually 940,000 for Ontario specifically. Appreciate TikTok, Kyle, joining me here. If you're also following me on Instagram or YouTube or Facebook or LinkedIn or X, we are there. Send me your questions. I can help answer them. But unemployment actually has gone up 3 months in a row now in Canada, which is also concerning. Not very much, 0.2%, 0.2%, and then 0.1%. So even though unemployment's rising, it's rising in such a minuscule amount. It's not going to really uh, make any difference at all to the Bank of Canada with their decision on September the 6th. I think they will probably consider it, but they will not really factor it as a real serious concern. I think inflation's going up, house prices are going up. Investors are thinking that the rates are going to go up, and I think they're going to go up. 25 basis points is what I'm predicting for September the 6th. That will shoot prime rate from 7.2%, which is currently, to 7.45% in Canada, which is going to be quite high. I haven't seen a prime rate of 7.45% or even 7.2% for that matter in Canada since I joined the mortgage industry just about 13 years ago. So I appreciate you guys watching me today. This has been Canadian Mortgage Weekly, episode number 153. This is Canada's only weekly video mortgage news podcast for the mortgage consumer in Canada. There's a lot of information out there. Make sure you follow my channel, whether you're on Instagram, YouTube, TikTok, Facebook, X, or LinkedIn for further updates. I'll be releasing short videos every day of this week. And join me next week for another episode of Canadian Mortgage Weekly as we get closer to this September 6th rate announcement. And as I mentioned, I think the Bank of Canada is going to raise rates on the 6th, which will put further pressure on house prices to go down and further pressure on Canadians to try to make ends meet as these renewals come in at mortgage rates that are a lot higher than what they were when these Canadians first bought their home and locked in their mortgage rates just a few years ago at rates that were way lower. And now rates are, they're, like I said, 300% higher than they were just 1 to 2 years ago. So thanks for watching. Make sure you follow my channel, and we'll see you next time. All right, trying to get off here. My screen is unresponsive.